Welcome back to Bazaar Morning Call. Hope you're having a good morning so far. Well, after the last couple of days, perhaps the bulls are not having such a great morning. But let's see which way things go. Lots of stocks in focus today, so let's get straight to it. First up, BPCL on our radar. Sonal is here to tell us more about that. Sonal, morning.
Good morning, Sonia. Well, it was a good set. Operationally, it was better than what the street was working with. So on a quarter-on-quarter basis, revenues were up 4.5%. EBITDA came in at 9,211 crore rupees, which compares with a poll of 9,016 crore rupees. Margins came in at 7.9%. That's a big growth sequentially, and profits were up 24% as well. Now, GRMs, the reported GRMs they came in at $12.4 per barrel, which is versus the estimates of $17.1 per barrel. So refining was a miss this time around. The refining throughput came in at 10.4 million metric tons, which was higher than what the street was working with. But overall, operationally, it was a good quarter. They announced dividend of 21 rupees per share. For FY24, dividend came in at 42 rupees a share. They also announced a bonus in the ratio of 1:1. Morgan Stanley says that BPCL had the best outperformance in margins amongst the oil marketing companies. Now, all three of them have reported numbers. Jeffrey says refining was below. However, margins will remain range-bound going forward. The net debt was also sharply lower, 50% down on a YY basis. So they are positive on cash flows and balance sheet going forward.
All right, thanks a lot for that, Sonal. Well, I'm also watching out for Escorts Kubota because the company had a conference call yesterday and the takeaways were not too great. The commentary was quite muted, actually. The company said that they expect the tractor industry volume growth of low to mid-single digits year-on-year for FY25. And they speak about how Q1 FY25 demand continues to be very weak. There are, of course, several reasons for that, which we have documented ad nauseum. Lower Rabi output, impact of elections is something that will hit demand. So they're talking about demand recovering only from August of 2024. Now, they also say how their other segments are doing well. So the construction segment, for example, the EBIT margin at 9.3% is the highest ever that they've seen in this segment, picking up because of election-related construction activity, etc. And the railway segment order book also continues to be quite stable at 950 crores as of March versus 900 crores in December of last year. Now, the capex guidance that the company has given out as well stands at 300 crores. So it's higher capex in FY25 compared to 175 crores in FY24. But I'm going with red because very muted guidance for FY25. They talk about low to mid single digit growth for the full year. But do note that we will connect with the management of Escorts at 9:40 a.m. today to get more details on that. But back to Sonal to talk about MGL and SRF and why she's watching that one. Sonal.
Well, let me start with Mahanagar Gas reported numbers yesterday. While volumes were largely in line with estimates, it was a margin miss. And that's why I'm going with red on the stock. Revenues were flat at 1567 crore rupees. EBITDA was down 12% on a sequential basis. Margins came in at 25% versus a poll of 27%. And profits were down 16%. They came in lower than the poll as well. As I said, volumes were largely in line with estimates at 3.77 MMSCMD. And EBITDA per unit was lower than estimates to come in at 11.48 rupees per unit. So yes, it was a margin miss this time around. For SRF, the company conducted a conference call post-market hours yesterday. They are looking at a growth of 20% plus in their chemicals business with margins of around 26 to 27%. For their packaging business, they said that BOPP is expected to fare better than BOPET. This industry has been facing a lot of supply challenges. FY25 capex could be to the tune of 800 to 900 crore rupees. Also, there was an anti-dumping duty by the US on refrigerant gas. The company says it will not have a big impact on the company per se because the street was nervous about it. Morgan Stanley says the company addressed concerns around demand and margins in its verticals and it is pointing to a gradual improvement in growth over FY25. UBS says they see cyclical bottom for this name and the worst seems priced in. So they have a buy with a target price of 2,700 rupees per share on the stock.
All right, Sonal, thanks very much for that. So we'll keep an eye out on these stocks. But, life insurers numbers, monthly numbers also came through. And it's an interesting set as always. Yash has got details here. Yash, good morning.
Good morning, Prashant. So, I mean, if you look at, the month of April on a standalone in an isolation basis, then except for HDFC Life, all companies have performed very well, very strong show in terms of premium growth numbers, APE growth numbers and retail APE numbers. But the game is a little more tricky than that. We need to, take in the base effect which also happened last year in the month of April. And if you do that, then in that case, HDFC Life's premium numbers are very weak. Premium has just grown by about 4.3% on a very favorable base Total APE and retail APE has grown at a decent pace. ICICI Prudential Life, again the numbers are weak. If you take in the base effect, the premium still growing at 28%, but still would consider it weak. Total APE and retail APE numbers are strong for ICICI Pru as well. Max Life numbers are stronger even after taking the base effect, and the retail and the total APE numbers also look strong for the company in the month of April. SBI Life numbers, the base was favorable, but still the numbers have done decently well at 26% growth on SBI Life. Total APE and retail APE numbers have been strong. And finally, LIC. LIC has seen a growth of 113% in premium in the month of April after factoring in a base effect of negative 50% in the month of April last year. The numbers still look strong for that life insurance giant.
Okay, thanks Yash for that. Well, let's hop across to Upasana, who's joining back on the Top 10 segment. Hi Upasana, welcome back, and run us through the stocks you have on your radar.
Good morning. Thank you so much, Nigel. Now, first up is Abbott India. The company has reported its Q4 FY24 numbers, and a good set, must say. The revenue is up about 7% on one-year basis, and EBITDA margins have expanded sharply, almost about 100 basis points from 21.9% to 22.9%, while the profit is down about 8% at 287 crores. While it is important to note that the company has declared a final dividend of rupees 410 per share. Next up is Suryoday Small Finance Bank. The company has reported a healthy business momentum with disbursals up almost about 39% on one-year basis. NII saw an uptick of almost 29% on one-year basis, and PAT also saw an uptick of almost 56% on one-year basis. While the asset quality of the company has also improved, with GNPA ratio at 2.9% versus 3.06%, and an NNPA ratio stood at 0.8% versus 1.4% sequentially.
All right, thanks a lot for that, Upasana. Appreciate it. So lots of stocks in focus. Here's a quick recap of our top stocks. The stocks with positive news flow: BPCL, SRF, Max Life, Abbott India and Suryoday Small Finance Bank, while stocks with negative news flow: Escorts Kubota, MGL, HDFC Life, SBI Life, as well as ICICI Pru. But let's go